Everyone tells you to invest, buy index funds, they say. Let your money grow, they say. But nobody shows you the actual first step, the boring door you have to walk through before any of that can happen. That door is a brokerage account. And here's the embarrassing secret. Opening one takes about 15 minutes and is easier than signing up for most social media apps. Yet fear of this one step keeps millions of people broke. By the end of this video, you'll know exactly what a brokerage account is, how to pick the right one, the exact steps to open it, and how to make your very first investment without feeling like an idiot. So what's a brokerage account really? Think of it as a special bank account that can hold investments. A normal checking account holds cash. A brokerage account holds cash plus stocks, funds, and bonds. The brokerage is just the company that opens this account and connects you to the stock market. You put money in, you click to buy an investment, and they handle the behind-the-scenes plumbing of the trade. Here's the key thing beginners get wrong. The brokerage account itself is just an empty container. Opening one doesn't invest your money. You still have to add cash and then choose what to buy. Two separate steps. But wait, is this safe? What if the brokerage goes bust? Great question. In the United States, most brokerages are protected by something called SIPC, which covers up to $500,000 if the firm fails. Important distinction though. That protection covers the brokerage going under and losing your assets. It doesn't protect you from your investments simply dropping in value. The market can still go up and down. That risk is always yours. Now the big decision. Which brokerage do you choose? There are dozens, and they all want you. Let me give you the handful of things that actually matter so you can ignore the marketing noise. Factor 1. Commissions and fees. The good news is that most major brokerages now charge $0 to buy and sell stocks and exchange traded funds. If a broker tries to charge you per trade, walk away. Factor 2. Account minimums. Many brokerages let you start with $0 and buy fractional shares, meaning you can own a slice of an expensive stock for just $5. Beginners should demand this flexibility. Factor 3. Ease of use. A clean app you actually understand beats a fancy platform that overwhelms you. The best brokerage is the one you'll actually log into and use without feeling lost or scared. Factor 4. What it offers. Make sure it gives you access to low-cost index funds and exchange-traded funds, the bread and butter of smart beginner investing. Most big reputable brokerages do. Stick with the well-known names. Before you open anything, one more crucial choice. What type of account? This trips up almost everyone. The two big families are taxable brokerage accounts and tax-advantaged retirement accounts. They aren't the same. A standard taxable brokerage account is flexible. You can put in any amount and pull your money out anytime. The trade-off is you pay taxes on your gains and dividends. Great for goals before retirement age. A retirement account like a Roth or traditional IRA gives huge tax advantages, but locks your money up until retirement age with yearly contribution limits. If retirement is the goal, this should usually come first. My simple rule for beginners: if you're saving for retirement, open an IRA first to grab those tax breaks. If you want flexible access for nearer-term goals, open a regular taxable account. Many people end up with both. All right, decision made. Let us actually open it. Step 1. Go to the brokerage website or download their app and click the button that says Open an Account. Choose the account type you decided on a moment ago. Step 2. They will ask for personal information: your legal name, address, date of birth, and your social security number. This is normal and required by law. Reputable brokerages must verify your identity. Do not panic. Step 3. They ask a few questions about your income, job, and investing experience. Answer honestly. There are no wrong answers here. They just have to legally understand who they're opening an account for. Step 4. Link your bank account. You connect your regular checking account so you can move money in. Usually you log in through a secure link or enter your routing and account numbers. This is how cash gets in. That's it. The account is open. Seriously, that whole process usually takes 10 to 15 minutes, and most brokerages approve you within minutes. The door you were so scared of just swung wide open. Now the fun part, your first investment. Step 1. Transfer money from your linked bank into the brokerage. Start with whatever you're comfortable with. Even $50 is a perfectly real and powerful start. Step 2. Wait for the cash to land. It can take 1 to a few days to settle. When you see the cash balance show up in your account, you're ready to actually buy something. Patience for just a moment. Step 3. Search for what you want to buy by its ticker symbol, a short code of letters. For a beginner, a broad market index fund tracking the whole stock market is the classic, sensible first choice. Step 4. Click Buy, enter how much you want to invest in dollars, review the order, and confirm. That is it. Congratulations, you're officially an investor. The hardest part was always just starting. Let me save you from the classic beginner traps. Mistake 1. Leaving your money sitting as uninvested cash. Funding the account isn't investing. If you don't click Buy, your money just sits there doing nothing. Mistake 2. Gambling on hot stocks and crypto tips you saw online for your very first buy. Start boring and diversified. You can explore later, but don't turn your first real account into a casino. Mistake 3. Checking the account every hour. Watching your balance bounce around daily will only feed your anxiety and tempt you to sell at the worst time. Invest, then close the app and live your life. Mistake 4. Falling for fancy fee-laden products a salesperson pushes. High fees quietly eat your returns for decades. Stick to simple, low-cost funds. Boring and cheap beats exciting and expensive almost every single time. Let's tie it all together nice and tidy. A brokerage account is just a special account that holds your investments and connects you to the market. It starts empty, so you must add cash and then choose what to buy. Pick a brokerage with zero commissions, low or no minimums, a simple app, and access to index funds. Choose your account type, an IRA for retirement or a taxable account for flexibility, or both if you can. Then open it in 15 minutes, link your bank, transfer some cash, and make that first simple, boring buy. Avoid sitting in cash, avoid hot tips, avoid obsessive checking, and avoid high fees. That is the whole game. Here's your challenge this week. Don't just watch this lesson and forget it. Actually open the account. Even if you only fund it with $25 today, you'll have crossed a real line. From someone who talks about investing to someone who actually does it. Tell me in the comments. Have you already opened a brokerage account? Or is this the year you finally do it? And which brokerage are you considering? Let's help each other out down below in the comments. If this cleared up the confusion, show some love for that like button so more beginners like you can find it. Then subscribe for a new, simple money lesson every week and share this with someone who keeps saying they'll start investing someday.